Foreigners, net sellers of South African bonds, about 7 billion has left the country just in early 2011. What do you attribute that to?
Loretta, a number of factors. Certainly, it has been a significant outflow, just north of that 7 billion rand mark for the year to date. But I think if we pull that timeline a little bit shorter and just look at what we've had for the month so far, we've had about 1.6 billion inflow for the month of February so far. Certainly well off the levels of what we had this time last year, when we probably only had about 140 odd million rand outflow at this stage. So two significant factors to this: increasing inflation expectations just generally in emerging markets. We saw steps being taken by China and the like. I mentioned before that South Africa credit in general, or investors had generally been slightly overweight South African credit through much of the tightening cycle, the interest rate easing cycle, and obviously expectations are increasingly that we've hit the bottom of that. So it really is a little bit more of a stabilization in the moment. But that's just half the equation. The other side of it, obviously, is the fact that we've had significantly less issues of debt compared to this time last year. We're probably sitting at about 2 billion rand of issuance so far for the year, compared to close to 9-10 billion by this time last year. So two offsetting factors playing a role there. Yeah.
Okay, we'll chip it away at it in small blocks, Alexi. I mean, we were told last year with huge inflows that investors were looking for yield in emerging markets. Now we're seeing inflation problems rising in China, as you mentioned earlier on, and inflation issues in Europe as well. So where's the money going if it's leaving South Africa?
Well, I mean, it's still very much emerging markets are still very much the flavor of the day internationally. What I think you are seeing is that with improved growth prospects in the US, for example, and even in South Africa, we had some fairly encouraging data out towards the end of last week on the mining production. Manufacturing production still slightly underwhelming at the moment, but generally the trend's expected to improve. So the counterbalance is that we've seen relatively good performance on the equity market. But I mean, it's always to be expected in the current environment. I think we'd expect a lot of the market participants. There's a lot of news coming through over the next couple of days and weeks. Most notably the budget, CPI data coming out, a lot of data coming out of the US this week. So South Africa seems very much in a holding pattern type of the moment. We aren't seeing yields moving up as aggressively as they were 2 or 3 weeks. They seem to have stabilized on the current levels, despite the fact that the rand has broken through that 720 type area and was flirting with the 730 area recently.
Alexi, are we likely to see volatility going forward because of the inflationary risks that you've presented and the fact that people expect to see South African inflation take up 3.7, some people are saying 3.8, and what that will do to the rand?
Absolutely. I think certainly the risk is for more upside pressure in terms of rates. That said, I think we've still got a while to go before the SARB is going to be worried about having to take action against inflation, even if by the worst estimates the CPI data this week comes out 3.7, 3.8%, with yields sitting where they are now. Certainly your long-term yields well north of 8.5%. There's still a decent risk reward, so to speak, in that. Obviously, the risks to inflation are always skewed with the rand in particular. So we'd expect inflation to pick up a lot quicker with the recent weakness than if we had the rand strengthening going forward. So I think we can expect some slight volatility, but I think the demand for bond side also needs to be supplemented with the fact on what's going to be happening on the supply side. Certainly with corporates, SOEs, government expected to start moderating from the borrowing levels we had 2-3 years ago. So it should keep things well supported. And obviously, with yields sitting at where they are now, you will obviously naturally start finding more appetite from your investors. You know what I mean?
Let's talk a little bit about those yields and capital gains there, Alexi. I mean, you mentioned that the yields currently north of 8.5%, for instance, but people are seeing that for there to be real return for the investor, particularly those who are looking for value in bond funds, those yields have to go northwards of 9.5%. When are we likely to see that trend?
I mean, I totally agree with your comment. I mean, if you're sitting as an investor and you're taking on 8.5% yields for the next 10 years, I think we can all fairly much agree that perhaps inflation might not be a concern over 1 year or 2 year, but typically bond investors are looking at on it for the long run. So, I mean, certainly in the current environment, 8.5% for a 10-year yield. If we do have a significant pickup in inflation, that is going to start looking relatively unattractive in the current environment. But I don't think we're near that point yet when that's going to be much of a concern, where investors have to be worried about inflation completely eroding the yield that they're getting on their bond investments. Certainly not in the immediate future. So that seems to be where we are sitting at the moment. Obviously, as a foreign investor, though, the rand is really the question. I mean, if you look at what some of the foreign investors have been receiving in terms of yields, they get a double whammy. We've had a nice, even take it back to this time last year, our 157, for example, was sitting at about 8.4, 8.5%. So we're about 90 points lower than that. Add the fact that the rand strengthened over that period, so they've had a real double whammy. The local investors, obviously, it's a different ballgame, and I think certainly the risks are that are certainly more to the upside than they are to the downside.
Alexi,
but
I was just going to say, I'll give you 10 seconds to tell me asset allocation. Do we still advise people to put their money into fixed income assets, move into cash? Some people are saying, look at equities completely.
Look, I think in the current volatility, the volatile environment we find ourselves in at the moment, certainly while equities are very attractive and have been performing relatively well, bonds will always need to form a core component of any portfolio. Historically, South African investors have generally been underweight bonds for a number of structural factors, limited supply in the past. That is being remedied. So even though they might be looking less appealing now than they were, say, a year ago in terms of potential for decrease in yields, many investors have a certain amount of catch-up to play. Certainly, we're seeing a more shift away from your traditional government bond holdings and state-owned entities into other credit.